Ladies and gentlemen, welcome back. This is Christopher Aaron. It is September 4th, 2025. It is time for a gold price alert. We have gold that has just broken out to new all-time highs above $3,500. I want to share with you what I anticipate is coming for the gold price here within the next several weeks to several months. You may or may not know, iGold was launched almost 10 years ago today. I'm very proud of what we have achieved in that time and where we are. The price of gold is up 3.5x, 3.5-fold from when I launched this service. So, anyone who was paying attention back in 2015 or 2016, I'm glad that you were. That said, I'm going to give you what is going to be one of our last gold price updates for a long time on this service. Why? Because in the future, I'm going to be switching to what I really love, which is to cover all markets from a chart-based perspective, an investing and trading perspective on all different markets with a focus on the charts. The charts is how I arrived at investing in gold 10 years ago. And it is how I will arrive at investing in the next market that we are going to turn our attention to over the coming months and going forward. So I'm glad to have you here. Make sure to follow us on X at iGlobalGold because some weeks I don't have time to post on YouTube. I post more on X. Make sure to hit the subscribe button, the bell icon, and if you have 1 second to give it a thumbs up, thank you very much to those of you who take that time to do that. It does really help the algorithms here on YouTube. Let's get into it. Our legal disclaimer first. And now we go. First, I want to talk about the short-term price action for the gold chart. Here's our key. Now, you can see right here where my mouse is, this is a clear break just this week to new all-time highs. The former all-time high from April was $3,500 and 10 cents in the spot market. We're always talking about spot prices, which is the closest to the current price that you can get for the bulk commodity. Obviously, if you're talking about refined products, coins, bars, there's going to be premiums on those. If you're talking about futures prices, there's going to be premiums on those. The spot price is the closest price that we have to the bulk commodity itself. So, new all-time high for gold just this week. What do we expect? First of all, there are two patterns that are playing in with gold simultaneously right now. And this is really important for you to grasp how gold should be moving over the next couple weeks. The first is this sort of awkward-looking kind of cup pattern with a slightly lower bottom over here. Sort of looks like a cup or maybe the silhouette of a boat. One way or another, it's a consolidation pattern you can see with horizontal resistance. That's the key part, and a slightly variable rising support. So that's the first pattern that we've noticed for the last 5 months for gold. The second pattern, can you see it? It's sort of embedded within the first pattern. It is this. It's a triangle with one little false breakdown there in the green part, but otherwise notice the number of hits on this triangle rising and the number of hits on the triangle falling. And so if you ask me, well, which is the predominant pattern, this is one of those times that I'm going to say it's both. I've studied so many other technical analysts, so many other investors and traders in this space, and I would say I am noticing an even split. About half of them are calling it a triangle consolidation, and half of them are calling it this ascending kind of cup pattern in green. And so because I'm noticing this in my real life, you've got to understand that this is a reflection of the fact that investors and traders out there are split as to which pattern this actually is. And that's going to impact the ultimate target that we get from this short-term consolidation that has just broken out. Now, the amplitude of this pattern, whichever one it is, yellow or green, is $380. That's from 3,500 down to the low right here, 1,000 3,120 for the low. That's a $380 amplitude. And the only difference here is that when we have a triangle pattern, to arrive at a target, we add that amplitude onto the apex of the triangle here. But when we have a cup-shaped consolidation, we add that amplitude onto the peak of the cup itself, the horizontal resistance shown in green. So in this case, we have two sets of targets, both of which are considered valid, and you'll see that they're not all that far from one another, within $170 here. So target A is that amplitude, $380 added on to the apex of the triangle, yielding a target of 3,710. Target B is 3,880. And I should just say that target B is close enough to the psychological round figure of 4,000 that I think it's possible that as this market works its way higher to target A and then expectantly to target B, I think this market could overshoot target B by another $100 or so and get close to 4,000. Maybe it gets to 3,900. Maybe it gets to 3,999. Maybe it gets to 4,050. You see what I'm saying? But somewhere in this zone. We're never going to have the precise number, but we can have a fairly high probability target zone here between 3,710 and then up through and including 4,000 for a target. Now, here's where I think we need to take a step back. And I have this as a question mark. And you guys know that I have been bullish on gold for the last 10 years. And gold has risen from $1,000 when I started publishing in 2015 up to almost $4,000 in 10 years. Now, nothing moves in a straight line forever. Remember this. So, I have a question here that after we get into this target zone, which, to be honest, with gold above 3,500, you look how quickly gold rose here to get into this consolidation back in April. Gold rose by $550 in 2 weeks. If it was to do the same thing from this breakout or this breakout, we would be up here at the target zone 2 weeks from now, which coincidentally is when the Federal Reserve releases their next interest rate cut as the market is expecting. So this could all happen a lot sooner than I'm projecting here. I'm projecting out into November, December, late year. This could really happen within the next 1 to 2 weeks. And then I have this question, is gold going to form a multi-year top? A multi-year top after the next wave. Now, let's take a look at the long-term perspective, okay? Look, we were just looking at this. That's how insignificant the short term is compared to what? The long term, right? But still, we have the shorter term targets that we're talking about just below $4,000. Now, I want to remind you about something. Right here at the green shading is what? This is when I launched iGold, late 2015, when gold was just above $1,000 per ounce. Don't believe me? Here is a screenshot from the video. I have not deleted any videos. You can go back into the member archives. Look at this video, September 6th, 2015. That is, we're talking exactly 10 years ago, almost to the day. What did I say? Watching for bottoms in gold and silver. And look at the summary. Bottoms are forming. And you can read the discussion here, and then you can go back and watch the entire video. It was a 35-minute video that I produced in late 2015 saying bottoms are forming. Bottoms are forming after what? Gold had declined by 45%. Look at this. From almost 2,000 down to almost 1,000. I remember when I launched iGold, no one was interested. Did you see how many views we had on this video here? 223 views. That's how many people wanted to hear about gold potentially bottoming. No one was interested. Gold had fallen by 45%. And you ask yourself, wasn't the US dollar losing value? Yes. Wasn't the Federal Reserve printing more money? Yes. Wasn't there unsustainable debt and wars going on in the Middle East? Yes. So how did gold lose 45% of its value even as the Fed and all central banks were debasing and printing money? This is what the point that I'm trying to get at here. I came out and said, I think gold is bottoming there. Very few people wanted to listen to me there. Understanding the fundamentals alone of currency debasement and of unsustainable debt is not sufficient to ensure that the gold market continues to move in your favor. Gold can move opposite to your macro thesis for many years and many percentage points based on an entirely different set of fundamentals than you or I or any of the other precious metals investors might be aware of. We do not have perfect information, but what we do have is the power of the charts. The charts contain the sum of all human knowledge, including the fundamentals that we know about and the fundamentals that we do not know about. So, from the time that I launched iGold, physical gold itself is up by 3.5-fold. Congratulations if you were one of those couple hundred people, and I know some of those investors still. They are still part of our premium service, and I get emails from investors often saying, hey, I was following you back in 2015. Thank you for letting me know that gold and silver were bottoming. I've captured most of this move. I say congratulations. I'm glad to have you on our team. I hope you'll stick with us because I'm going to be expanding into other markets very soon. Back to the present. Gold is up 3.5 times in 10 years from when I made that call. So, I think that we have a little bit more to go for this cycle. We discussed the targets a few moments ago. And then I suspect that gold is getting ready to form a multi-year top. Now, again, if you're saying that can't happen because the fundamentals, because a central bank is printing money, because they're debasing the currency, because we're taking on unsustainable debt loads, what about here? What about from 2011 to 2015? What about from 2008 to 2009 when gold lost 35% as the Federal Reserve was engaging in the largest money printing, quantitative easing, bailout regime in the history of the United States? They nearly tripled their balance sheet in 6 months, printing all the money to bail out the banks in the global financial crisis. Gold fell by 35% during that period of time. Understanding those fundamentals are not enough to prevent gold from moving against you at certain times. What about in here? What about in 2022? Gold lost 25% of its value as what? Russia was invading Ukraine. The United States was withdrawing from Afghanistan. The Federal Reserve was printing money. They were slashing interest rates. Interest rates were low. There was too much inflation. Why did gold lose a quarter of its value? Are you telling me that you don't think that can happen again? My expectation for the coming several years after the next set of targets is that gold will lose somewhere in the realm of 25 to 30% from whatever level is the peak coming up within the next several weeks or several months. That could be 3,700, that could be 3,900, that could be slightly above 4,000. I expect it's going to lose 25 to 30%. Yes, as the Fed continues to print money I suspect that what is going to happen is that the markets are pricing in all of these interest rate cuts coming, and I expect that the Fed is not going to be able to cut interest rates as many times as they are currently projecting. And so the market's going to be going from pricing in 5, 6, 7, 8 interest rate cuts to perhaps only pricing in 2 or 3. And I think that is going to cause gold to come down over the next couple of years. This is the long-term look at gold. Now, after that point, I am open to the possibility that gold will go much higher a little bit later this decade and into the 2030s. But let's take one step at a time. I'm getting ready for the counter trend move that should be setting up, and you've got to be really careful if you are overexposed to the gold market right here. Remember, I'm not some sort of paid basher for gold. I launched iGold right here. You can go back into the member archives or into the free archives here on YouTube and see the video that I published in September of 2015 where I said I think gold is bottoming. It's up 3.5-fold, almost 4-fold since then. This is going to be one of the last videos that I do on gold here for a long time for free. For our premium subscribers at iGold, we are discussing ways to protect yourself from a 25 to 30% decline in the price of gold. And then I expect silver will drop with gold, but it'll fall even more on a percentage basis. And I suspect that the gold and silver miners are going to fall even more than gold on a percentage basis in this correction. We are discussing these ways to protect yourself right now in our premium service at iGold. So this is what I think is coming. If you would like to join us, Precious Metals Intelligence Plus is where I am discussing how I will protect myself. We're doing that in our members-only videos. They're more than an hour every single week. We cover not only gold, silver, the mining sector, Bitcoin, the stock market, the currency markets, every open market buy and sell signal that we make going directly to your inbox. I'm telling you, if you value these videos, I am not going to be here discussing gold every single week. It is going to be most likely several months from now, the next time I discuss gold. So make sure to protect yourself now before that decline sets up that we expect. If you would like to discuss your situation in our consultations, which are very limited in my time availability, I will sit down and discuss what I would do if I were in your situation. We sit down for either 30 minutes or 60 minutes. I can take a look at your mining stocks. I can take a look at your percentage of silver, percentage of gold, what forms you have. We can discuss hedging strategies. All this and more based on your unique situation. Guys, remember, I am long-term bullish on gold. I think over the coming years and decades, it is going to be going higher. However, we have seen the evidence every several years, time and time again, just because the fundamentals seem to suggest one thing does not stop gold from moving lower by 20, 30, 40, even 50% over the course of several years. That should be coming again starting soon. This is going to be one of those times where you either choose, I'm going to stick with the fundamentals that have proven to be incorrect in the past, or I'm going to side with the actual data, the price action, which is more important than anything else. And in fact, that is how I originally launched this channel back in 2015. It was 100% based on the chart, nothing else. That is what I love. I hope you will stick with me in following the charts as we go forward. Thank you.